Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shana. Thanks for tuning in today. It is Friday. It's Rapid Fire Friday. That means that we want to get as many questions from you as possible. We're going to be live here for the whole hour. If you're watching during the live time, which is 8 a.m. Central, 9 Eastern Time, our phone lines are open. You can be the first caller in the queue today, and the number is 610-363-1110. So we do want to hear from you. You can call us about anything stewardship related. So if you got questions about the market, the economy, we're going to get you caught up here in just a minute. You can call us if you have questions about becoming a partner, how to support this ministry, what it means to come alongside of us and become your own portfolio manager, managing your own biblically responsible portfolio. We call that defunding darkness because we're helping you to screen out the companies who are using shareholder dollars to fund an ungodly agenda. So we don't invest in companies that participate, that fund agendas like abortion, pornography, the LGBTQ agenda, human rights violations, and so many other things that Scripture warns against in our lives. We also encourage you to be a joyful, generous, and obedient giver. We call that funding the light. Those are the core components of stewardship that we talk about here. Financial Issues Stewardship Ministry is the name of our ministry, and that is our focus to help the saints of the church to become and to continue to be good stewards with all of the resources that the Lord has trusted us with. So on today's show, we'll get to your calls and questions. 610-363-1110 is the phone number. We're going to get you caught up. We're going to get you in the know about all of the happenings this week and what to look forward to next week. We'll also get encouragement from the Scriptures. Today we'll be in Job 10:11 through 12. So at Financial Issues, we help you to stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets and help you understand how that impacts your own personal financial issues. So here are a few of the takeaways that I have for this week that is ending on today, May the 23rd, 2025. So we started the week off with a fresh debt downgrade from Moody's that nobody really cared about, except, of course, the bond vigilantes. China pitched a trade tantrum over the U.S. warning about the national security risk involved with using chips from China, specifically the Huawei Chips. We got Biden's 1 million pre-election job creation fairytale that got revised away with the swipe of not the auto pen, but the BLS's pen. And the big, beautiful tax bill is on its way to the Senate. So we started the week with Moody's downgrading the U.S. credit rating from AAA to AA1, citing escalating debt levels and persistent deficits, something that we had no idea that was happening in this country. Sarcasm noted. While the downgrade was decades late and a couple of $1 trillion short, it didn't cause immediate stock market turmoil. But the bond markets did take notice, and it didn't like it. The downgrade got the bond vigilantes stirred up. So bond vigilantes are those who actively sell bonds to push yields higher. They are protesting. They are getting rid of their bonds. And when bonds are sold, when demand decreases, the interest rates have to go up to entice buyers to come in. So that is a way to punish or influence governments and central banks when they perceive that there is fiscal or monetary policies that are irresponsible, that are creating inflation and are unsustainable, which is indeed the case in the United States and around the world. The term bond vigilante was first coined in the 1980s and describes how investors act like vigilantes, taking matters into their own hands, driving up borrowing costs through selling of the government bond, which lowers bond prices and raises yields. In the past, this has worked to pressure governments to tighten fiscal policy, to shape up their spending, or central banks to adjust monetary policy to curb inflation and stabilize debt levels. For example, if a government runs large deficits, sound familiar, or a central bank keeps interest rates artificially low for too long, sound familiar as well. Bond vigilantes might sell off bonds, increasing the yields, making it more expensive for governments to borrow money. So they were notably active this week. Even though the stock market didn't react to the downgrade, the bond market did, and we saw a spike in U.S. Treasury yields and a weekly Treasury auction. The 30-year surpassed 5% this year. That's the highest it's been since November of 2023. There's just a big red flag that most of us just cannot ignore, and that is our debt service. So we're now at the point where our defense budget, what we're spending to protect and defend this country, is equal to what we're spending just to service the debt that we've borrowed to do things in this country. Additionally, concerns over President Donald Trump's proposed big, beautiful bill, the 389-page tax bill, adding to what some estimate $4 trillion to this deficit over the next decade. This further fueled the sell-off in the bond market as investors worried about increased borrowing needs. And the House has passed the big, beautiful bill in a vote of 215 to 214. It passed the House of Representatives. Every single Democrat voted against it, along with 3 Republicans. The passage of the bill will help Trump deliver his campaign promises about securing the border, deregulating, solidifying energy independence through a policy of drill, baby, drill that will produce and has already produced lower gasoline prices and lower energy costs for all Americans, which is helping with inflation. And he will continue to protect and defend this great country. It also makes permanent his tax cuts from 2017, which were set to expire at the end of this year, preventing about $5,000 to $10,000 of tax increases on middle America if it had not been extended. It also implements the no tax on tip and no tax on overtime policies that President Trump campaigned on. It raises the debt limit by trillions of dollars, which I guess is a necessary evil to keep the United States from defaulting on its debt while we trudge down the road to lower spending. It is going to block federal dollars from funding transgender procedures and helps put the nail in the coffin for many DEI programs, or at least the ones that have been funded by our tax dollars. It also does include Senator Ted Cruz's idea for a $1,000 investment account for all newborns. Almost 1 million jobs that President Biden campaigned on have been wiped away as magically as they were, quote unquote, created. Biden often referenced the millions of jobs that he created during his term, specifically the 800,000 jobs that were created in 2024, leading right up to the presidential election that it did not secure for him. Well, it turns out that there was actually a loss of 164,000 jobs as the BLS has revised those numbers. So many of the Biden jobs that were created were actually government jobs. They weren't in the private market, and now they're all gone with the swipe of a pen. What's even more, America First, native-born workers increased by almost 1 million, and foreign-born workers dropped by 410,000, perhaps many of them self-deporting. So while Biden ballooned government payroll that creates nothing and is not productive, Trump's latest labor report showed a gain of 177,000 jobs in a single month. What's even better, 90% of them are being created by the private markets. So we see somewhere in the neighborhood of $10 trillion of private investment announced just since Trump took office. And this is going to help fill up our labor fuel tank with rocket fuel. The markets are having a negative week, though. Since last Friday, the Dow's down almost 1%, the S&P's down 1.3%, the NASDAQ down 1.2% going into this final day, and the pre-markets are down somewhere between 1.5% and 2% with new shots fired in the trade tariff war. Trump's threatening a 25% tariff on Apple for iPhones sold in the U.S. that aren't made in the U.S. and 50% tariffs on Europe as a result of trade negotiations, quote, going nowhere. What's coming next week? We'll get a second look at first quarter 2025 GDP. And PCE data is also coming out next week for inflation. Now that you're in the know about the recent and upcoming financial issues, we hope you'll learn more about our ministry and how we can help you integrate those issues into your own stewardship. Find out more about us at financialissues.org. Stick around. We'll be back with more right after this.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
May is a time to honor mothers, their strength, sacrifice, and unconditional love. But for many women, motherhood feels uncertain and overwhelming. Fear and doubt leave them considering abortion. You can give hope. Just $28 helps a woman hear her baby's heartbeat, a powerful moment that leads 80% of mothers to choose life. Go to preborn.com/FISM to give today.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Thanks for sticking with us. Let's get some encouragement from the scriptures. Our stewardship verse today comes from Job 10:11 and 12. You clothed me with skin and flesh. You knit me together with bones and sinews. You have granted me life and steadfast love, and your care has preserved my spirit. What do you think, Seth?
This is good stuff, Shana. So it's a little bit ironic when we first look at it because it's coming from the mouth of Job. So Job, of course, is well known for having suffered a lot, especially in what we know of his life. He had a great life, and then God in his sovereignty allowed him to suffer, and then God ended up blessing him even more than he had been blessed before as a result of it. But, in the midst of suffering, we're reminded so clearly here that, Job has been deeply loved by God. He was never forgotten by God, even as he was in the midst of his suffering. The suffering was for a purpose, one that perhaps Job never even knew while he was on this earth. Certainly he understood, at least in a better sense, once he got to glory. But God loved him deeply from the very beginning, and that was, of course, his conception. God has a deep love and care for all of human life, knitting each of us together. And that's such a good reminder for us as we're in the midst of this preborn campaign, Shana, that God's love for us doesn't begin at our birth. It's long, long preceding that.
Right. Well, there were no ultrasound machines back in Job's day. And it makes me wonder, well, how did he know that God knit him together in his mother's womb? Well, he knew because someone he trusted told him so. Job knew that God created him because it was a foundational belief in ancient Hebrew that God is the creator of all life. That was a truth that was passed down through the generations even before the scriptures were written down. So it was passed down verbally. The Hebrews people have been amazing stewards of God's word. They have carefully memorized it. They passed it down orally even before it was written down. I mean, can you imagine if we had to do that today? If we had to remember God's word because we didn't have a written copy of it or 10 written copies of it at home or an electronic version on our phone, I bet we would know God's word a whole lot better than we do right now if we hadn't had all of these conveniences. But, Preborn Ministries has also been one of the greatest stewards of the gospel of Jesus Christ, too. They get the opportunity to pass that truth on to women in crisis pregnancy who may have never heard the word or who may have forgotten that God cares for them deeply. They are told of God's amazing love and for the baby that he is knitting together in their wombs. They are shown that baby on an ultrasound and they get to hear the heartbeat. And as a result, so many of them choose life. Preborn has a great passion for saving unborn babies from abortion and for seeing women come to Christ. Over the last 18 years, since 2007, preborn clinics have counseled, you ready for this number? Over 500,000 women who were considering abortion. And more than 280,000 babies have been saved as a result of their efforts, and 80,000 women have come to Christ. Every day, preborn clinics rescue 200 babies from abortion. So if you support preborn, you will be very likely to hear a story of a woman and maybe see their little ultrasound, a woman who chose life because, very likely, of the donation that you made. But even if you never meet her or her baby this side of heaven, think of the glorious reunion we will have one day in heaven, not only with the babies, but with the mothers and the fathers who chose eternal life because we were willing to give. So, would you help us to meet our goal? We have a very lofty goal of raising $280,000 in the month of May. We've got little less than 10 days to go to raise this $280,000. We're well on our way. We're almost at the $140,000 mark, but we need your help to make this a reality. Go to our website, financialissues.org. You'll see the information there about the preborn campaign, and you'll be able to make your donation. And this campaign is just a beautiful illustration of God's math, how God multiplies things. Because if we give the $280,000, then 50 ultrasound machines are going to be purchased and placed in clinics. So we're going to pay for the ultrasound machine. A generous donor is going to buy 50 machines, place them in clinics around the country, and Financial Issues is also going to be given a match of up to the $280,000 that we raise. So, if you're already giving, we thank you. If you've thought about giving, now is the time to do it before the end of May. So go to financialissues.org. If you're watching us on TV, though, we have a QR code that's on the screen. It's super easy. All you have to do is point your phone right at that QR code. Then the link to give securely is going to pop right up. So we just encourage you to do that. Fund the light. Be a joyful, generous, and obedient giver. All right. Do we maybe have some time to get to some of the website questions?
I think we do, Shana. I know we've got website questions. We do have a call in the queue right now,
Okay.
but we can get to that, or we can get to one of these questions.
Do Do we have time to take the call?
I think we do. Yeah.
Okay.
Yeah.
Let's go to the call.
We do.
It is
Awesome.
Rapid Fire Friday.
Sounds good.
Let's go to Sherry. Sherry's calling from Texas. Hi, Sherry. You're live on Financial Issues.
Good morning. How are you guys this morning?
Doing good.
Great, Sherry. Thanks for calling.
Yes, I'm off work today, so I was able to call in and just wanted to try to find out. I'm 59 and I'm in the growth and income and plan to work until I'm 70. But because of all the sales we had over the last year, I'm very heavily weighted by about $85,000 in my cash in my IRA. I do have a Roth, which is my smaller portion of cash, and I've been doing the healthcare and the tech and that. So my most important question is, I still have quite a few like commodities, consumer staples, materials, utilities, financials, preferreds, and REITs that I don't have filled out in my IRA. So how should I deploy the $85,000?
So I would go to your portfolio tracker, and there's a new feature on there now. It's sort of at the top. There's a button that you can push, and it'll pop up, and it'll tell you exactly how much money you're short in each of your categories. So since we're talking about the IRA, it sounds like you've been listening really hard to the tax located strategy that we talk about here, using your Roth for your really aggressive investments, because that's where you get the tax-free growth. So that's where you should take advantage of your growth. So if you're looking at your IRA, I think you mentioned that you are light in your preferreds. That would be one area that I would look to fill out as soon as possible, because that's sort of your it's very similar to fixed income. If you're short at all in your fixed income, then you can go to the buy list and you can see what's there for that. So I would see how far that gets you towards getting that $85,000 placed, focusing on the fixed income, the preferreds, and then next I would go to the REIT category and work on that for the IRA. If you still have room after that, then you're just going to want to look at any investments that are kind of coded with a style of income.
Okay. So do you believe that the growth in income at 59, if I'm planning to work till 70, is the best area, or should I be in growth?
So assuming that you have a normal risk tolerance, and we have a really good description of our asset allocation models on the asset allocation page. So if that fits you well, then you're probably in the right category. I mean, I think at age 59, work until 70, that gives you another 10 years until retirement, until you're potentially going to be drawing down. I think that's probably the most appropriate, asset allocation model for you. And, because it's going to give you the best of both worlds. It's going to give you growth and it's going to give you income. So the closer that you get to that age 70 over the next 10 years, as you're rebalancing, as you're going down the road, with rebalancing your portfolio, then you can start to focus, as you get within that 5-year period, you can really start to focus more on the income type of investments. Probably wouldn't switch right over to the income model when you get to 70, but probably at least for the first 5 years after retirement, I'd stay in the growth and income model.
Okay, great. All right. Well, thank you so much. Praying for the preborn. I support the preborn and you guys, and just love you all.
Thank you, Sherry.
Thanks, Sherry.
We love you too, and thanks for supporting us and for supporting preborn. So, all right. Have a happy Memorial Weekend. And folks, it is Memorial Weekend coming up this weekend. I say this because we're about halfway through the show. We're at the end of the show if you're only listening on an outlet that carries the short version of the show. So I just want to encourage you and remind you that this weekend is Memorial Day. Speaking of the Hebrews and how they were such a great steward of history and God's Word, we too can be a great steward of that as we celebrate. Memorial Day is to honor those who have given their very lives to protect and defend the freedom all of the freedoms that we enjoy today. So tell your loved ones why we don't have to go to work on Monday, and why we get to celebrate this weekend. And be sure to remind them that even that there are people who have given up their lives to protect and defend the freedoms, but the freedoms were given to us by God. We are a country that recognizes that. All of our founding documents point to that our freedoms are God-given, and it is the responsibility of the government to protect and defend those freedoms and not to infringe on those freedoms. So that's one of the things here at Financial Issues. We love America. We love Jesus, and we just want to reiterate that to our listening audience to encourage you to be faithful stewards of everything that God has given you. And it's not just finances, it's that history. It's the reason that we love this country, because of what we stand for here in America. So we hope that you will remember that this weekend as you're celebrating. And if you are listening to an outlet that only carries the short version of the show, we wish you a farewell today. For everyone else, though, stick around. We do have more Financial Issues coming up right after this break. I'm your host, Shana Burt. Stick around.
Each May, we celebrate Mother's Day and the gift that mothers are to us. But for many women carrying a child, motherhood feels uncertain. They're facing fear, doubt, and some are considering abortion. This May, you can help make motherhood possible by supporting Preborn. Preborn partners with clinics across the country, providing free ultrasounds and sharing the hope of Jesus Christ with women who are abortion-minded. When you give to Preborn, you're giving these women a chance to choose life. Just $28 helps a woman hear her baby's heartbeat, a powerful moment that leads 80% of mothers to choose life. And when we come together to sponsor 200 ultrasounds, we'll equip a Preborn clinic with a life-saving ultrasound machine. Will you help make motherhood possible? Go to preborn.com/FISM to give today. That's preborn.com/FISM.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Welcome back to Financial Issues. It's the second half of Rapid Fire Friday today, and our phone lines are open. 610-363 is the number to call. You'll be the first caller in the queue. So if you want to get your call queued up, it's 610-363-1110. Wanted to wish a happy birthday to our president, Yvonne Celia. Today is her birthday, so hope she has a great and wonderful day today. Let's take a look at the markets. The markets have indeed opened in negative territory this morning. So President Trump, I guess he got up on the wrong side of the bed this morning.
I guess so. You get a tariff, and you get a tariff.
That's right. So he took to Truth Social this morning and is now threatening Apple with 25% tariffs for iPhone sales that aren't made in the U.S. and really criticizing the EU that trade negotiations are sort of falling apart, citing hundreds of billions of dollars in non-tariff barriers that he doesn't like, and is threatening a 50% tariff on them. So I suppose that the markets will continue to react negatively to that. And indeed they have. On the open this morning, the Dow's down almost 1%, the NASDAQ's down a little bit over 1%, and the S&P down right at 1%. Oil is at $60.63 a barrel, reacting as well. And the Treasury markets reacting on different news on that debt downgrade that we got earlier this week. They seem to be the only market that really reacted with the, like I mentioned in the first segment, those bond vigilantes coming back out. So we've got the 10-year Treasury at 4.5%. That's pretty decent. Treasuries are one of the things that kind of tend to stay on our buy list for fixed income. So those yields are pretty decent right now. And so if you have CDs that are coming due, that might be a place to look. The 30-year Treasury is at 5%, which is as high as it's been in a really long time. This, what tends to affect mortgage rates more than what the Fed does is the long-term Treasury. So this is not good for the mortgage markets. We've seen mortgage rates get up into the 7% range again, which is bad for the American dream of home ownership. So we have got to get this spending under control. Looks like the big, beautiful bill is moving right along. It's going into the Senate, where I'm sure it will see some changes. Then it'll go back to the House, hopefully get passed, and then land on President Trump's desk, and he will sign it. The goal is for all of that to happen by Freedom Day, by Independence Day, July 4th, when the Congress goes on vacation. So they're hoping to get that done to create some certainty there. That's going to go a long way. It's going to prevent $5,000 to $10,000 tax hikes for individual, which if that happened, if the Tax Cuts and Jobs Act from President Trump's first term didn't get made permanent, seeing a $5,000 to $10,000 increase to our individual tax bills would certainly put a damper on consumer spending, which would not be good for the economy. It's going to go a long way towards deregulation. Lots of campaign promises delivered on here. No taxes on tips, no taxes on overtime. I know that is a hugely popular thing in my area. I live in Refinery Central, so a lot of our local economy is supported by folks that work in the refineries, and a good portion of their annual income comes from overtime. So our economy here has held up pretty strong because there's all kind of plant expansion projects that are going on. So our real estate markets are healthy, our job markets are healthy, and so we're happy about that. All right. So we don't have a call. If you want to get your call queued up, 610-363-1110 is the number to do it. While we're waiting on your call, though, we do have lots of questions that have come in from the website.
Shanna, before we get to those, great comment from the chat here. Ann in Alabama saying, thank God for our May flowers, Yvonne and Shanna. So happy late birthday to you and a birthday to Yvonne as well. Folks, if you want to give Yvonne and Shanna a birthday gift, by the way, donate to Preborn. That's a great birthday gift. Do that right now.
Birthday.
Yeah. First question we have here, Shanna, is from Will. He's saying, hi, Shanna, the new buy list spreadsheet filtering is very helpful for style. The filter options are income and growth. And then Dan also had the foundational class. I'm an income investor, but I also buy foundational stocks, and I particularly liked the foundational income stock combination. What's the reason that the foundational class is currently not identified, and will that foundational class return? Will 66.
So the rapid fire Friday answer is that it won't return. And the reason that it's gone and that it's not returning is because times change. CEOs change. Corporate cultures change. So it's been really hard for us to call any stock a foundational stock. You may have noticed that we've had many sells for stocks that were considered to be foundational at one time. Some of them have been for biblically responsible reasons, and some of them have just been for fundamental reasons, things that have gone wrong. So a company's culture is really dependent on its leadership. So when its leadership changes, it can't really be considered foundational anymore unless that culture is continued on, and in so many cases it's not. So the only foundation, though, that we can really build on is the Word of God, because it never changes. So, our commitment to biblically responsible investing will never change. And, I think that has been reinforced by our willingness to issue sell alerts on what was once considered foundational stocks. And, we're never going to waver on that when a company strays and begins to support dark agendas with shareholder money. We'll never hesitate to do that. Dan didn't either. And, I firmly believe that any of his foundational stocks that were not meeting the criteria for biblically responsible investment, he would have never hesitated to issue sell alerts on them as well.
Yeah, that's really good stuff, Shanna. And just this is a follow-up from me, actually. Is it fair to say that having the mindset that any holding that you have, you're treating it as foundational, quote unquote, because you're intending to hold it for a really long time? Is that an okay mindset to have?
That's a great mindset to have. And that's one of the key principles of our strategy. We are a buy and hold strategy. We're not a buy and ignore strategy, though. We're not going to ignore the things that are going on. And if there's ever a reason that changes, or it looks like it is, the management is not doing what they said that they would do, or they're not being able to deliver for whatever reason on those things, we're not going to react quickly to news and issue sell alerts. But if those fundamental things change, our opinions are going to change as well. So, anything that's on the buy list, we really try to avoid, there may be some things out there that, that maybe are trendy and that, are expected to go up a lot in a short period of time. But, maybe it's just because it's contingent on certain things happening, like deregulation or energy policy, or in the Biden administration, we have things that are selling off right now big time because they were in that wind and solar space, and that's being dismantled. So, we try to avoid things like that. When we look at a company and we put it on our buy list, it's because we have a good long-term outlook for it. Awesome. All right, folks, we've got the Ag Report coming up. We're going to hear from Craig Halgert. After we hear from Craig, we are going to take a short break, but then we'll get right back at it. So if you have a question, you'll be the first caller in the queue. Dial it now at 610-363-1110.
This is Craig Halgard with your Financial Issues Ag Update for May 23rd. Well, corn had a mixed close yesterday with the spot month higher and the deferred months all lower. Exports remain strong with the weekly export sales coming in at 46.9 million bushels. Now, total export commitments for the year are up 28% from a year-over-year perspective, with the USDA projecting a 13% year-over-year increase. July corn finished the day 2 cents higher at $4.63 per bushel. Soybean futures finished higher for the fourth straight session. Now, the budget bill cleared the U.S. House of Representatives, and 45Z remains in the bill, but with modifications, which make it less appealing to the soybean oil industry. Now, rumors are that the tax credit extension is half of the original proposal, which, if true, could end up putting pressure on both soybean and soybean oil prices. We had July beans 4 3/4 cents higher yesterday at 10.67 1/2. Wheat was on the defensive for most of the session. Now, once we get past Memorial Day weekend, traders are probably going to turn their attention to yield reports, starting with southern Oklahoma and North Texas as the harvest is starting to ramp up. The expectation is that yields are going to be fairly strong, and thus we saw the market be just a touch weaker in yesterday's trade. Minneapolis July wheat was 4 cents lower at $6.25. Kansas City dropped by 1/2 cent to close at $5.40. It weighed Chicago 4 3/4 lower at $5.44 1/2. Cotton futures just remain range bound. July futures ended the day 44 points lower at 65.63. While livestock futures were mixed. August live cattle were $1.85 higher at $210.50 per hundredweight. August feeder cattle rose by $3.35, ending the day at $299.77 1/2 per hundred. And July lean hog futures were 47.5 cents lower at $102.05 per hundredweight. Class 3 milk futures just kept running to the upside as they put in a new life of contract high. When the closing bell sounded, July futures were 20 points higher at $19.83. Well, this has been Craig Howgard with your Financial Issues Egg Update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
Every day, thousands of women are faced with the decision of whether to have an abortion. But one ultrasound can change everything. For just $28, you can provide an ultrasound, giving a mother the chance to choose life. To make your gift go even further, a generous donor will match every dollar you give, doubling your impact. Just go to preborn.com/FISM to give now. Again, that's preborn.com/FISM.
Came to Crossroads as a 4th grader. His name had been brought to my attention by the school principal. She was concerned about the direction he was heading.
I remember I wasn't the best kid. I got into trouble a lot.
He became a very active part of Crossroads Kids Club.
Mr. Engel, he was the leader that really impacted my life in so many ways. I honestly didn't want Crossroads to end.
We would invite all the students to come to our youth group here at Waterfront.
I felt God saying, come on, come to me. It felt like I was set free.
And I'll never forget the day when we had the privilege and the honor to baptize Pharrell.
I hugged Mr. Engel. I don't know if he understands. I'm truly, thankful to have him through the whole journey. If it wasn't for Crossroads, I probably wouldn't be in the place that I am right now. I wouldn't be a follower of Christ.
Help reach more kids like Pharrell with the hope of the gospel. Visit reachOurSchools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to the home stretch of financial issues leading up to this Memorial Day weekend. I kind of figured we'd get more calls today because people might be off and they probably have nothing better to do than listen to financial issues. But the number is 610-363-1110. If you call it now, you will be the first caller in the queue. We'll be sure to get to you before the end of the program today. But don't worry, we've got lots of questions that have come in from the website. So let's get to some of that.
We sure do. So, Shana, we were talking during the break. We got a question that came in on Rumble. I believe it's Sharib is asking this, saying the notes in red that were on the old asset allocation, where can we find those on the new site? Sharib, I apologize if I'm presuming, but I think what you're referring to is the partner investment disclaimers. And you can find that on the asset allocation model. If you scroll down, it just, at the lower part of that page, it says partners read investment disclaimers here. Click on that disclaimer button. I think that's what you're referring to. If not, you can always follow up and try to ask us, see if we have any more info for you. But just wanted to get that one there, Shana.
Yeah.
Yep.
I know some of that has been taken off. And it was our new site is so much more easy on the eyes, and there was some verbiage down the side. Maybe that's what he was talking about, that referred to like the A shares, the mutual funds, the long-term nature, short-term mid-cap. We've sort of incorporated that in other places on the site. So there's now descriptions for our asset allocation models. Some of the verbiage for the mutual fund stuff is included in the description when you're looking on the broad list, the description of the holding. If not, let us know if we didn't answer that, or if there's something specific that you're looking for that you can't seem to find. Maybe try the search feature in the top, and if you can't find it there, then just send us another message, and we'll try to get to the bottom of it.
Yeah, that's awesome. Thank you, Shana. Let's get to this one from Mike. This is a good question. Mike's 54. He's saying, when do I take profits? For instance, I have one stock that is 70% in the green. Should I take my profit and reinvest it in the same company if that stock goes back down, or just let it stay and grow? What do you think?
So the more important thing is to follow your asset allocation model. So whenever you look at your portfolio tracker, you're going to see there's a column there that tells you what percentage that particular stock makes up of your entire portfolio. If it's under, I would say 3 to 5% of your portfolio, it's probably best to just let it ride. I mean, there's a good reason that it has been as successful as it is. It's doing a great job delivering its mission, and probably, for the most part, can continue to do well. If not, then it'll suffer a little bit of a pullback. But if it's doing great for you and you're not overweighted in that one holding, don't worry about it. Because you want to have good companies make up a meaningful portion of your portfolio. So that's kind of where our rule of thumb comes in. If it's less than 3% of your portfolio, definitely don't even consider getting rid of any of it. But if it's well over that 5% mark, then that's a great reason to do it. So, if it's a good company and it continues to be a good company and it continues to be a decent holding in your portfolio, you may never get a chance to buy it back at a lower price. I mean, that's kind of what we've seen. Dan used to talk about putting in bottoms in a company, and what that refers to is just the longer that you own it, if the reasons that we bought it pan out, you're probably not ever going to have another chance to buy it as low as you did before. So you may never get that chance if you get out. There's no guarantee that it's going to be a lower price at some point in the future. We don't know the future of the stock, so we can't really say that just because it goes down in price, that's a good time to buy it. Maybe something fundamentally changes with the company, or something changes from a macro perspective that makes the future prospects of the company not very good. So if that's the case, you really wouldn't want to put money into a company that doesn't have as rosy of a future. So the best practice is just to manage your asset allocation. Don't get too overweighted in any one individual holding. Now, the percentage rule doesn't apply to mutual funds or ETFs that may be in the portfolio. So just individual positions, and just buy from the buy list, because the buy list is going to represent our best long-term ideas at what we consider to be either very good or good entry prices. So, you may be able to use the profit from selling off part of that great company to find another one just like it.
That's awesome, right. Shannon. Good stuff. Looks like we got a call from your home state.
All right, let's do it. Today's Texas Day.
It is Texas Day. That's a good day.
Hi, Diane. You're live on Financial Issues.
Hey, how are you?
Good.
I was wondering, and I'm going to work another 2 years. I'm 73, and I have some duplexes, and that income is a significant part of what I'm planning for retirement income. And I was wondering how you would code that. I've kind of thought of it as being part of my fixed income. If I put it, in a real estate holding or something, the value of it skews way too high. But so I was wondering how to account for that income without making it look real disproportionate to the portfolio as a whole.
So are you talking about adding the income that you get from those rental properties into your asset allocation, or are you talking about putting the value of the properties on your portfolio tracker?
Well, that's kind of my question. What should I do with it?
So the only thing that should go on the portfolio tracker are considered to be investable assets. So the problem with putting the value of the duplexes on your portfolio tracker is that you're probably not going to sell them, unless you get to the point where you just don't want to be a landlord anymore. So what happens, like you already pointed out, if you put the value on there, it's going to skew your portfolio tracker. So I would really just consider it a source of income, and I wouldn't necessarily put the income on the portfolio tracker unless it is investable. Let's say maybe you're getting $1,000 a month from your rental properties and you don't need it to support your lifestyle, so maybe you're going to invest it. So if that's the case, it would just show up as cash added into your portfolio tracker.
Okay, all right. And if I'm going to use it to live on in a few years, then you would just not put it on the tracker at that point?
Well, again, the only thing that's going to go on the tracker are investable assets. So if you're taking the income from the properties and you're just putting them into your bank account and you're letting your savings build up, or you're using it to fund your lifestyle, then it doesn't go on the portfolio tracker. It only goes on the portfolio tracker if it's investable, because what will happen is it's going to show up in a category, right? It's going to show up in a category, and it's going to make that category overweight. So if your portfolio tracker is telling you you need to take money out of this area and move it somewhere else. So if that's not a realistic possibility for you, then it doesn't need to be included as part of the investable portfolio.
Okay, well, that makes sense. Thank you.
Great. Thanks for calling, Diane.
Thanks, Diane. Awesome. Yeah, Shana, that's a great description there. I'm sure that helped a lot of people out, especially folks who are doing some of the more hard asset investing.
Yeah. You know what? I don't know if we have time to get to another question today. Sure. Folks, I hope that you did tune in for Bible study this morning. Seth, you want to cue everybody in into where we're going to be next week?
Yeah, I'd be glad to. So we're in the Daniel series here, folks. Really been enjoying this series. Hope you have as well. Daniel chapter 5. We're in the midst of exploring this kind of little nuts character of Belshazzar. So Belshazzar, not Belteshazzar. That was Daniel's Babylonian name. This is Belshazzar, the son of Nebuchadnezzar, technically his grandson, but he was his heir to the throne. And it's the mysterious story of the handwriting on the wall, Shana. One of the creepiest stories in all the Bible, actually. So we looked at Belshazzar's reaction these last 2 weeks, and now he calls on Daniel. We'll see Daniel's response next week. So we'll be in Daniel 5, verses 17 through 24. So if you want to read ahead, you can go ahead and do that. It's really easy to join. Just go to the resources tab, click join our Bible study, and the call-in number and access code is there for you.
And if you're a partner, you have the extra benefit of being able to listen, right?
That's right.
So we have those
right on
archived on the website.
Yep. Under the under that Bible study page as well. You can listen if you're a partner. It's great partner benefit for sure.
Great job. I see it up there on the screen, guys.
They do pretty good, Shana.
They do.
We enjoy having those guys.
They're professionals. All right. So, folks, this is, we're heading into Memorial Weekend. I hope if you have the day off today that you're enjoying it. And if you have the day off Monday, that you're going to enjoy it even more. And again, as I encouraged you in the first part of the show, be a good steward with all that you know. Share with those that you're celebrating the holiday with. Remind them of why we get to celebrate, and that we're honoring those who have given up their very lives to protect and defend the freedom that have been given to us by God. So great opportunities to share the reasons why you love America, and an even greater opportunity to share why you love the Lord. So take every opportunity that we have and be a good steward of the Word of God. And our finances as well. If you haven't contributed to the preborn campaign, I encourage you to pray about that and go to the website and do that today. So I hope that you have a wonderful weekend. I hope that you have a great day of worship on Sunday. And I hope that you come back next week, because we're going to be here. So we will have a show for you on Monday. If you're off and you're not celebrating with friends and family, tune in. You can also catch the full versions on our phone app. Just go to your favorite, app provider and download our app. And come back next week, because we'll be here to remind you time's getting short. The Master is coming back. Our goal is to help you be found a good and faithful steward with all the time, talent, and treasure that the Lord has trusted you to manage. I'm your host, Shana Burt. Find out more about our ministry at financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.